Alrighty guys, so the nuclear option I did utilize here today. I did have to do it, and it is this. I went ahead today and I sold 3 baby positions in the public account. These were all very, small positions relative to the portfolio. And I went ahead and put that nearly $50,000 all into PayPal here today at $56.05. I acquired another 883 shares of PayPal here today. That puts me in the public account now at 3,105 shares in that particular portfolio. So it has become a very large position. And if this stock does go to where I think it's going over the next couple of years here, it's going to become a much larger position overall. This is now the 4th biggest position in the public account. If we look at my Mag 6, which my Mag 6 in the public portfolio is positions that I have over $100,000 in. If we look at that, it's now the 4th biggest position out of all those. It's now eclipsing ELF and eclipsing even Palantir now at this point in time, which shows the belief I have in regards to the stock, right? And it's also the only one of my Mag 6 that I'm down on, right? I mean, the other ones, Meta's 283% gain, Tesla's 588%, Amazon's 58%, PayPal's negative 10%, and then ELF's 2,200%, and Palantir's now 177%, right? So for me to put this into the same group as these stocks shows the belief I really have in this company, that I think it's going to be, one that shines through and it's going to get me unbelievable gains, and I take relatively low risk in this particular stock, okay? Now, also, in the Patreon portfolio, which I spoke about at the beginning of the video, right, where you get to see all the moves I make, this particular portfolio, it's the number 1 position I have in that particular portfolio, eclipsing every other stock out there, right? Which once again shows the belief I have that I would make this the largest position in the Patreon portfolio, and now the 4th biggest position in the public account. There's got to be something here, okay? That's all I'll say about that, right? Now, there was something very important that happened on the conference call that I haven't heard anybody else pick up on other than myself, okay? And that was toward the beginning of the conference call. Within the first 2 minutes of Alex Chris talking, he described the results they just posted as solid results, right? If I say solid, let's say you cook me dinner, okay? You come on over the house and you cook me dinner over there, and you say, how was the food, Jeremy? And I say, it was solid. What does that mean? It means it was okay. It's okay, right? If I say, oh my gosh, that was amazing. The dinner you cooked me, that was amazing. If you flip my flapjacks, right? Oh, that's a holy smokers, this ain't no jokers. That's a great dinner you cooked me. Oh, that was really good. That was excellent, right? Those mean something else. If I say it's solid, it was a solid dinner you cooked. That's nothing special, right? Now, what's fascinating about this is that's the way Alex Chris described this quarter, right? A quarter in which they had 15% total payment volume growth, and he described it that way 3 times, so it wasn't a mistake. This was pre-planned that he called it a solid quarter 3 times. 3 times within the first 2 minutes of him speaking. 15% total payment volume growth to over $400 billion in the quarter. 9% net revenue growth, 39% operating income growth, 52% net income growth, and 61% EPS growth. It was solid. Maybe that tells you a little bit about where he sees the future of PayPal and the type of numbers he thinks the company can put up over the coming years. If that's just solid to him, right? Because that's like, wow. Now, there's a conspiracy theory going on in regards to PayPal stock. Okay, there's a big conspiracy theory that I got to tell you guys about. And it might hold some merit. So the conspiracy theory is management team comes out on the conference call. First off, they don't give a yearly guide as far as rev. They lowball guidance in general for any numbers they did put out there, right? So there's a conspiracy theory that the management team, Alex Chris and those folks, purposely didn't want to sound too excited because they didn't. They did the opposite of try to pump the stock. If anything, they try to not pump the stock, right? So they did not even one thing remotely try to be pumpy on the conference call, right, to get anybody excited. Also, lowball guidance and those sorts of things. So there's a conspiracy theory that they came out and did that because they're going to buy back a ridiculous amount of shares of stock this year, right? And, I mean, they talked about they want to buy at least $5 billion worth of the stock. So you come out, you lowball your guidance, you don't even give certain other guidance numbers out there, right? Your stock goes down. Well, guess what? You can buy so many more of the shares out there, right? Here's the deal. PayPal's market cap's only like $60 billion right now. $60 billion, right? So basically, PayPal's going to be able to buy back roughly, I would say PayPal this year should be able to buy back. It depends where the stock price goes throughout the year, but probably between 7% on the low side and maybe 11% of the entire company's stock they should be able to buy back over the next, let's call it 10 months or so, right? So we're talking about, this is a substantial portion. This is one of the biggest buybacks I know of in terms of how many of these shares the company's actually going to be able to buy back this year, right? So if you did know that you're going to do a $5 billion plus buyback, why would you want the stock to go high in the short term? We know a share buyback is a CEO's best friend, right? Because you buy back all those shares and oh my gosh, it helps your EPS so much over the next many years, right? And puts you in a position of power as a CEO in a huge way, right? So I think that's pretty darn important, especially when you look at how much SBC PayPal's had over the last, we can call it, 5-10 years or whatever, right? They're going to be able to take off so many shares off the market. So it's a conspiracy theory that I think holds some weight, just to be honest with you guys. I really do, right? So first off, income statement wise, it was a grade A income statement. Net revenues went to over $8 billion from 7.3, almost 7.4 billion the same quarter last year. Transaction expense, transaction and credit losses, they kept those numbers in check. Customer support and operations, they actually brought that number down significantly year over year. Sales and marketing brought that number down. Technology and development, they were able to bring that down some. General administrative was one of the trouble spots that went up year over year. Total operating expenses went to about $6.3 billion from 6.1 billion the previous, previous years, the same quarter. But look at how much revenue went up. I mean, we're talking about, a $600 million plus, almost a $650 million difference in revenue. But, we can call it $150 million difference maybe in expenses there. So ultimately, their operating income blew to the moon, $1.7 billion versus $1.2 billion in the same quarter last year. Net income went to $1.4 billion from $921 million in the same quarter last year. And EPS on a diluted basis, $1.29 for this latest quarter versus 81 cents at this same point last year. So that's a grade A income statement. There's, it's almost as good as it gets. There's another level, like a Wynn Resorts was an A+, right? Meta was an A+, but this is pretty dang good across the board there. If we look at the numbers this way, right? Total payment volume, TPV, which is one of the most important metrics people look at when it comes to PayPal stock, that was up 15% year over year. They did over $400 billion in total payment volume in a 3-month span here. That's very impressive, right? In the same quarter last year, they did $357 billion in total payment volume. So definitely very good to see as far as total payment volume just continues to grow. And the company very shortly here should be at a multi-trillion-dollar run rate when it comes to total payment volume per year. Multi-trillion. It should be probably in the next 2 years, I would say. It will be a multi-trillion-dollar TPV. So very impressive. Net revenue, 9% growth year over year there. Operating income was up 39% for the company. Net income was up 52% for the company. EPS was up 61% for the company. These numbers are obviously extraordinary there. If we look at the balance sheet, cash and cash equivalents went to over $9 billion. Short-term investments was around $5 billion. Long-term debt was down for the company, down to $9.6 billion from about $10.4 billion in the same quarter last year. Total equity for the company is up to over $21 billion in total equity from $20.2 billion in total equity in this same quarter last year. Now, CEO observations. I like this here. PayPal has a strong position to build upon, strong franchises, brand trust, employee culture, engage global two-sided network at scale, 100%. Accelerate this is what they want to do, priorities for driving focused execution in 2024. Accelerate our branded checkout business. Improve overall profitability, including higher growth PSP services. Unlock the power of data to create more value for our customers while tapping into new sources of revenue and margin. Operate more efficiently. Now, there's something very important I heard on the conference call that they kept coming back to. Something very important, I think, okay? And there was Alex, Chris, and the management team, they mentioned several times small and mid-sized businesses, right? And if we think about Intuit, which is where Alex Chriss is from, right? One of the greatest companies and stocks over the past, 15 years or so. And that's where, Alex Chriss was extremely important to that team over there. Where does Intuit thrive? It thrives in small and mid-sized businesses with obviously not just their tax-related products, but QuickBooks specifically, okay? And so it's very clear to me that PayPal's future is not just, people transferring money between themselves, but really, and not just the large corporations in terms of what they're doing with Braintree side of the business, right? But also small and mid-sized businesses. And so, if you know my belief on the economy and the world, like the world's run by small and mid-sized businesses, right? Taking action, new world-class team hired new CFO, Chief Financial Officer, President of Global Markets, Head of SMB and Consumer, small and mid-sized business, and Chief People Officer, organized business units around our customers, reinvesting cost savings into product engineering and marketing, will include stock-based compensation in non-GAAP results beginning with our Q1 2024 earnings report. Now, I thought this was big. Now, this can hurt the non-GAAP numbers in the short term if you're going to include stock-based compensation, SBC, in there, right? No doubt about that. But I look at that, I say, okay, so that hurts the numbers short term. At the end of the day, I think this is amazing. This is great. This is like full transparency to me. As a long-term shareholder, I want to be invested in companies and management teams that are fully transparent with me, and I can say, I like everything. They're not trying to hide something here like a lot of companies do, or even the old PayPal in terms of hiding SBC. It also makes management team have to pay attention to SBC a lot more. And why should you as an investor care about SBC? Well, if they continue to dilute shareholder value like crazy, right, you're not getting nearly as much of those earnings as you think you're getting because more and more shares are going on the market all the time, right? If anything, you want to be in a situation where there's less and less shares over time while the company's net income's going up, because that means your earnings per share is going to shoot to the moon, okay? So that's a very important point I just made there, and so I love this overall. Now, so far, this is a situation where, this is the way I'll put it to you. I got to put a mental picture in everybody's head of what's going on here, okay? Imagine you got this beautiful cruise ship, this unbelievable cruise ship, and it's a great cruise ship. But the problem is it's just kind of floating around in the water, and it needs to get into gear, and they need to point it in the right direction. It's just kind of sitting around floundering a little bit. So Alex Chriss, the new captain, and the new team come over, and they take control of this beautiful ship, which PayPal is an absolutely beautiful ship. Between the PayPal service, Venmo, and Braintree, this is an incredible opportunity. This is top tier, right? And so he's coming in to get this ship pointed back in the right direction and get this ship moving. Because no one's really happy with the state of movement. It's like, man, we're taking forever to get anywhere in this dang beautiful ship, okay? That's what he's coming in to do. He's not coming in to get on the Titanic. He's not coming into a broken ship. He's coming into a beautiful ship. It's just not quite moving the way it should be moving. And he's coming in as being the captain to move this ship in the right direction. I love these two things right here. Love these two things. They talk about principles of value creation. Start with the customer. Beautiful. I love this. Focus on profitable growth. That's what I care about as a company like PayPal. Anything that is in the finance-related game, the banking-related game, fintech, focus on profitable growth. That's what I care about. I don't just want growth for growth's sake. I don't want you to just put up some vanity metric of we have this many users. I don't care about that. We're not in that market anymore. This is a market about money. This is a market about profits. It's a market about EPS now. This is a market about cash flow now, okay? Focus on profitable growth. I love it. Drive operating leverage over time. Set measurable goals and communicate consistently. That's another check mark I have there because I love that. Set measurable goals. Not just something like some pie in the sky, you got to set measurable goals, hit those measurable goals, beat those measurable goals, and then communicate that, right? I love that. This is all the stuff that as a long-term investor you eat up. You love this freaking stuff. This is everything as a long-term investor. If you're short-term, you don't care about measurable goals. You care about the stock going up or down tomorrow. That's all you care about. For a long-term investor, this is the type of stuff we care about because this is what it's going to dictate the gains in the stock over the coming 3 or 5 years. Maintain strong balance sheet and return excess cash. I love it. How do they return excess cash? Well, long-term, they could consider a dividend, but in the short term, it's share buybacks, and we'll speak about that in just a moment, okay? Now, if we look at the numbers here, something brilliant's going on, something I love, okay? This shows you full year numbers versus what just happened in the latest quarter. So, some very interesting things are going on here, okay? Total payment volume for the company is accelerating. Growth is accelerating, not decelerating, accelerating. Because look at full year, they were at 13% growth in TPV. Then they went up to 15% year over year here. So that's an acceleration that is like really, really good news, okay? Revenue for the full year was at 8%, but this most recent quarter they did 9%. So another acceleration in growth rates. Great news. Transaction margin is getting better for the company. If you look at the most recent quarter versus overall year was down 1% versus a flat. That's moving in the right direction, right? Non-GAAP operating margin went from 22.4% to now 23.3%. Almost 100 basis points in improvement there. This is like huge, guys. This is absolutely massive. The fact that you can see all this acceleration in growth is a very promising sign for the company. Focused on driving profitable growth. Check this out here, okay? So this is kind of when the business bottomed, in my personal opinion. This was in Q2 2023, and a couple quarters ago, basically, and growth kind of bottomed there at the 8 and 7% range, and now they're up to about 9%. So I like that. That's really good there, okay? Also, we bottomed in Q2 2023 in terms of non-GAAP operating income and margin percent, right? 21.4% we got down to, now we're back up to 23.3%. I look for that number to be, 24 plus at this time next year, okay? And if we look at non-GAAP operating income, 1.5 billion, now they're up to nearly 1.9 billion. Headed in the right direction. The ship is moving, and we're moving in the right direction, okay? Good news. Transaction margin, look at this. Last quarter was negative 3%. Now they got it to flat. Okay, so where do we go next? Up 1, up 2? That's a big step in the right direction in terms of transaction margin. That matters significantly. Non-GAAP EPS for the company. In this same quarter last year, it was 11%. Now they're up to 19% non-GAAP EPS growth. Also, very impressive, okay? These things matter significantly if you care about the long-term future of PayPal. Check this out here. Account growth, right? 2% down year over year, right? Now, as I've told you guys a million times, PayPal could easily put up a vanity number there, right? You just set up some incentives, $5 if people use the app and, you share it with your friends and this and that. And you get a bunch of people using it that might not even ever use it again, but you could show a big vanity number to make your accounts look good, right? But that's not where PayPal's focus is. And that's honestly, I want people to actually use PayPal, Venmo, that want to use PayPal and Venmo. Not just people that got in because they got some, free offer or something like that, or some, bonus. I want it to be people that actually use it. And so monthly active accounts actually just grew 1% year over year. Number of payment transactions grew 13% year over year. That's phenomenal. Transactions per active account, very important, up 14% year over year. So this means, what does this tell you? This tells you that the people that are using PayPal's products are using them a lot more and a lot more and a lot more to run a lot more transactions. And this is very good news. And even if I think about myself overall, I mean, the amount I use PayPal now is extensively more than it was, 5 years ago or 3 years ago. And the reason being is now PayPal has it so it integrates with almost any, as long as an e-commerce service of some kind has it where you can check out with PayPal, it makes it so easy because I can just click that, scans my face, puts in all my info, and boom, the transaction is done, right? I also have it set up for things like Uber Eats or Uber Rides or DoorDash or any of those sorts of services. And so it's just cake overall. And so it's just natural. I use it more and more and more because they make it that easy. And it's clear that Alex Chris, that's the way of the future, is making everything so seamless and easy that you just want to use it for more and more transactions. So this is big, folks. That's why I circled that so immensely there, right? Next one up here, PayPal CEO, and then we'll get into Elf on a Shelf.
After the close, despite beating the street's expectations on the top and the bottom lines, guidance and account growth disappointing investors in weighing on the stock. That call's going on right now. Kate Rooney's got the details. Kate.
Hey, Mel. Yeah, it's all about earnings guidance for PayPal. It's been weighing on shares after hours. PayPal did not give a forecast when it comes to revenue or for payment volume. That omission is raising some alarm bells for analysts, at least that I'm talking to. Plus, PayPal is seeing a slowdown in accounts amid more competition out there. PayPal had 426 million active accounts at the end of last year. That's about a million short of expectations. It was down 2% year over year. They did start to disclose monthly active users, but there is no comp for that. PayPal also looking for full year EPS on the earnings side. $5.10. That was 38 cents below expectations for the street. Q1 EPS growth also missed. Payment volume, operating margins, and take rate did beat for the quarter, but branded checkout was also light. I talked to CEO Alex Chriss about that forecast. He said, we're being conservative in the guidance. He said, we want to see points on the board, as he put it, and want to actually execute before we start putting anything into our forward guidance there. He just said on the earnings call that's going on right now, he said PayPal needs to, quote, build back a track record of delivering on our commitments, really trying to underline that change happening, and he calls it a transition year for PayPal, although he was also just asked about when that's going to start showing up in guidance. He wouldn't give an answer on that, Mel.
Yeah, I mean, obviously, I love the conservative-ness in kind of, thinking about guidance, those sorts of things. But I think something big, there's two things big here, okay? One is monthly active users. I love that they're going to start showing that number, because it's one thing if you just got a bunch of users. I mean, PayPal could put up a number of 500 million, right? And get a bunch of people to download it. But if they're not using it month in and month out, then what's the purpose, right? You really want to see how many people are actually using it actively. No different than Meta. Meta puts out a daily active user number each quarter and a monthly active user quarter, right? Those are phenomenal metrics, so you as an investor can kind of gauge, if people are actually using it, not just they have it on their phone, they have it downloaded or something like that, right? Now, there's something big that happened on the conference call that I haven't seen one person talk about or speak about. And it happened in the first 2 minutes of Alex Chriss speaking yesterday, okay? He described PayPal's results as, quote, solid results. Solid. He mentioned it 3 times in the first 2 minutes. Now, with him speaking, they had 15% total payment volume growth, 9% revenue growth, like 60% EPS growth, 39%, I believe it was operating income growth. To me, those numbers are better than solid. But maybe Alex Chriss just has a lot bigger ambitions and goals for PayPal over time than 9% and 39%. So that's all I'm going to say in regards to that, okay? And for that reason, I'm actually very, very excited for PayPal. The fact that, a man like that, the new CEO, thinks those results are just solid, not good, not great, not amazing, not stellar. I like that. I like that a lot.